CME Group. The first quarter of the year was a wild ride for equity investors, particularly those who invested in indexes. At first, in January, due to the January effect and tax reform, record inflows came in, pushing the S&P up to a new all-time record. But shortly thereafter, in the month of February, there was a lot of volatility that was introduced into the market. At that point in time, the VIX began to spike up and down when 23 times over that period of time, the market moved 1% either to the upside or the downside on the closing, by the closing. So the VIX had an 80% increase in its levels as a result of that market volatility. So what lies ahead? Well, even today we saw with the trade tariffs that there was a substantial fear in the market. Markets were down substantially, hundreds of points, rallied back, and we continue to expect similar ups and downs in the market in the near term. We believe that sometime by around mid-May, by that time, so there will be some positive results in some of the corporate returns and the earnings reports, as well as lower unemployment claims. At that time, markets should continue their upward march with a lot less volatility. But in the meantime, we can expect spikes up and down in the next couple of months.